This is Nicholas Bhandari with equities.com, and today we're presenting you with the Apple report that we just finished. We traditionally do reports in the small cap region between 500 million and 2 billion in market cap. Apple, we felt, though, was a very, very interesting concept from an academic standpoint and also from an investor standpoint. It's one of the most popular companies on Wall Street right now. Almost every analyst is bullish on it. The sort of average price forecasted is close to 140, while the stock sits at 123 right now. We took an entirely different approach to it, though. We valued it using some of our own proprietary techniques and believe that the stock is actually overvalued. This goes against a lot of some of the Wall Street beliefs, but we think it boils down to the size of the company, where it's getting its money, and the general return on equity atmosphere that it has currently. When a company becomes as large as Apple, its product is commoditized. The kind of barriers to entry that existed when it was a much smaller company and had access to brand new technology, they just don't exist anymore. You can already see this with companies like Samsung and LG, slowly taking away some of Apple's market share. The other issue is where they're actually getting their money from. The United States, Europe, and Japan are very stable markets that have almost been completely saturated. China, on the other hand, is a new boon for Apple's stock price, and it was taken extremely well by investors in the first half of the year. But China is a very finicky market. Samsung used to be the top producer of smartphones in China. They are now number 4. They dropped 4 spots in 1 quarter. There's no reason why Apple can necessarily count on revenues from China in the future. The current stock price is representative of Apple's infrastructure, but it's also representative of the future growth rate that people believe the company will attain. That growth rate is not realistic, especially not for a company as large as Apple. We encourage you to check out the report for yourself at equities.com/research. I hope